All right, guys. We are here in a beautiful garden villa. Kansas is a little warm, but we got some shade and some fans, so there's no complaints. This panel is appropriately named The Emergence of Arbitrum as a Dominant Tech Stack. Everyone has heard the announcement by now. I think it's appropriate. Let's give a round of applause to Arbitrum, the whole community, for onboarding one of the biggest TradFi players. Congrats, the whole team, the whole industry. I think it is a massive win. We are here joined by Matt from the Arbitrum team, Algis from the Symbiotic team, Andrew from Conduit, and Zigis from Dia. Shout out Dia for putting on such a great event. Guys, it really feels like we've graduated from the infrastructure era. You guys, we did it. We did it. You guys all built some very successful infrastructure, and we're now onboarding some of the largest consumer finance apps in the space. I'd love to hear just some perspective from everyone here before we get into Robinhood, Arbitrum, starting out with general infrastructure. How do you think over the last few months we've evolved the infrastructure of the space to get it to a point that is mature enough for finance applications with massive user bases? They now feel comfortable to trust our technology. Open question, but...
Hello. Hi, I'm Matt. I work at Onchain Labs. I think, well, first of all, shout out to the rest of the team. I was involved, but I think, it's really hard work to get large teams to trust new technology. So that was all on AJ, who you just heard from in the previous panel. So massive shout out to him. I think from my perspective, evolution in the last 3 months, there's a lot. This industry moves incredibly quickly. I would say, particularly with the rise of consumer awareness of inflation in global countries that have like high GDP, the yield that you can get in DeFi and the fact that it's been around for so long is becoming apparent to business owners that are trying to deliver more value to their users. And so I would argue that actually the evolution in the last 3 months is more awareness that the technology exists and has been securing assets for some time, as opposed to the maturation of the infrastructure itself, because it's been like this for quite some time. So that's just my perspective.
Feel free to jump in. We're just keeping it skeletal.
Yeah, maybe just quickly to add on. I definitely agree that the tech has been here already for like probably a year, a couple of years to launch such kind of solution. Just probably it had to gain some more trust, but like we've been securing so much capital for so long as an industry, right? And it's so simple now to launch like new layer 2s, like set up these like public databases that are more trusted. They can trade 24/7. So this is, I think, just a result of a long game that we've been playing in crypto.
Awesome. Well, I was curious to dig a little bit deeper into this massive integration, Robinhood choosing Arbitrum as a dominant tech stack. There was some speculation, maybe they were going to choose, another tech stack, or they were going to choose, to be maybe, independent. Why do you think, in your perspective, Matt, that Robinhood chose Arbitrum to launch this endeavor?
Tough question. I think there's a lot of variables and things like this. Again, to the previous point, it's a team effort. I think a lot of people were involved in making this happen, particularly on both sides. I would say there's probably, 2 reasons. Again, this is just hypothetical. One is I think the ecosystem in Ethereum is quite strong. And Arbitrum, since the beginning, has always been Ethereum aligned. So when you have like a mass network of people that are all pushing towards the similar goal of making permissionless technology available and allowing users to self-custody their funds, you have a demonstrated track record in the EVM, which Arbitrum and Ethereum and many other, chain technologies have displayed and have been pushing for. I think the other thing is just the tech. One of the things that's interesting about Solana's architecture is call stack depth is limited. So if you're trying to develop very complex multi-application DeFi protocols where you're allowing users or searchers or traders to make very, very complicated, like anything greater than like 4 contract interaction calls, you can't do that today, is my understanding. And that's one of many, examples of where when you're trying to build sophisticated DeFi architecture and make it available to everyone, which is their goal, right? Tokenize everything. You're going to be detail-oriented about the future of your product roadmap and understand, I want to be in the place where I can make it as open to developers as possible and allow, in the case of Robinhood, their team to build what they want as well. And so I think it came down to that as well as a bunch of other things, but yeah.
Yeah. I'm curious from, Andrew, you specifically have used Arbitrum in the Conduit stack, offering it as a service, customizing, deploying these rollups. Is there any constructive criticism that you may give to the stack or the team? Again, constructive here, right? Like how willing and flexible is the stack? What were you hearing from some customers that maybe they wanted to change about the stack and you were able to, and you maybe had to do some customizations? Constructive criticism for the stack overall as we continue to look forward and look for more of these integrations.
Yeah, I think that's a great question. We have a pretty open Slack where we're quite transparent with our feedback, but maybe to bring some of that out into the public, I think compared to other stacks out there, Arbitrum actually stands at the top as kind of the most customizable and like easiest to work with. I think a very basic example is just fast block times. So if any of you have used Arbitrum versus like Optimism, right? It's 250 milliseconds versus like 2 seconds by default. And that's like a 10x kind of difference. And that has a huge impact on DeFi and the types of UX and applications that you can build. So it kind of starts there. And really just, it's kind of the easiest product to meet our kind of customer requirements generally around. I think in terms of like areas for kind of feedback, I think, we have some pretty ambitious networks. Obviously, you guys have Robinhood L2 coming on chain. We are working together on Converge network kind of as well. And there's a lot of ambitious things kind of on the infrastructure side around even faster block times and how do we get the gas up. And so these are, I think, just general blockchain kind of performance improvement kind of things. And, couldn't find better partners than Arbitrum to really work on those with.
Algis and Ziggis, you guys also, complement the Arbitrum stack. Could you maybe unpack your experience working with Arbitrum up until this point? Same question also applies. Any constructive criticism?
Yeah, I think there are a lot of potential behind like Arbitrum because like comparing with other stacks, so they do have a lot of research like going on for like literally any stack, not limited by rollups, not limited by chains, like whatever. So basically for us, the important part is the composability. So we can get rid of some parts of the entire stack and reuse some other parts. For example, execution pipeline, we can decouple it like from the blockchain related stuff, from the rollup related stuff. So for us, it's very important because Symbiotic is beyond just the Ethereum. So it's not like something on top of Ethereum. It's something that should extend Ethereum, expand like rollups, expand chains, whatever. Maybe from DS side, so I guess we are both like using Arbitrum infrastructure for our operation because we operate our own layer 2 and then supplying the Oracle feeds to Arbitrum and supporting the Dapsphere. So I guess from choosing it as infrastructure, like the main point has been, as mentioned already, like fast block times, like 250 milliseconds is still one of the best block times that you can get in the entire market. And then you can get custom gas tokens. So again, customization is at its best. And then from the like supplying the Oracle feeds actually to dApps on Arbitrum chain. So I think, Arbitrum probably after like a month will be the only stage 1 rollup. And they have like a very clear roadmap to becoming a stage 2 rollup. So we've been doing really great work on that end. And a lot of dApps are just choosing to deploy there. A lot of TVL is going there, a lot of capital and like users finally ending it up. So it's really great.
We're just gassing you guys.
I was going to say, as a product guy, this is the best constructive criticism I've ever got. So I appreciate the work you guys do.
Incredible. Another thing Arbitrum does incredibly well, MEV. You guys launched Time Boost. There's quite a lot of thought put into how you're ordering transactions. This is something that I think, to your point earlier about why Robinhood chose the Arbitrum stack beyond something like maybe like a Solana is indeed to capture and retain some of the MEV that its customers are producing. Maybe you could give us some insight into how important of a decision that was for the Robinhood team and give us a little bit more insight into how transaction ordering works on Arbitrum with Time Boost and specifically with this Robinhood integration.
Sure. On the first point, I'm actually not sure. Can't speak to how that played into their decision. I think on the second point, in terms of the future of MEV, MEV is really interesting because, long debated in the EVM, it shouldn't exist, right? like permissionless trading should allow all peers to trade directly with each other. We should remove arbitrage. There should be no need for intermediaries. The value should stay with the people who own and move assets from one person to another. However, in distributed systems, it's almost impossible to avoid that, right? We've seen this when they deployed cell service off, the coastlines and fisheries. People would actually arbitrage where they ended up bringing their boat back to. And this was something that, technology enables uniquely. And so in more efficient trading environments like blockchains, the value of this type of arbitrage activity is only going to go up. And I think that what we're going to see is these large teams that have a lot of users and volume and order flows start to push the boundaries of the types of ordering policies that we've come to know. So like Arbitrum started as first come, first serve, still supported. Many chains mostly just do this. Time Boost was voted on and launched on the Arbitrum DAO. And the design of that was meant to strike a balance between protecting users and keeping spam low, as well as allowing protocols to collect that revenue. This is the early days, so we're not exactly sure what the designs will eventually be, but I think that these teams like Robinhood, like others, like Converge, these larger institutions who've been, let's just be honest, playing this game for a very long time in TradFi are going to exert their opinions on the design. And I think, to some of your folks' points on the customizability of the stack, that's actually like intentionally a feature, right? Being able to customize that to your project's needs is ideal, because at the end of the day, like, it's permissionless technology. That doesn't mean that every single app and chain needs to be owned by every person. It's hard to ensure that. So we'll see a lot of evolution in this.
Question for the non-Arbitrum personnel up here. I'm curious how you guys are thinking about value accrual in this stack. Ethereum and its L2s have had this contentious relationship. Now we have another big player entering the scene. How do you guys think value will flow amongst these systems when we have more users, more institutions onboarded? Even in the context of MEV, are they retaining all of that value, or is one net new user beneficial for the entire pie? How do you guys square this circle?
I think that's a really interesting question. I think, maybe looking at Solana, for example, where it's kind of maximum L1 value accrual is kind of an interesting place to start, where, you have wallets like Phantom, which take a percentage fee on swaps. You have Jito, which is like kind of the MEV layer. And then you have validators kind of taking a cut off of that. And if you look at an application like Pump Fund, which was kind of the dominant application generating all of this value for Solana, how much of that did they capture and how much went to kind of the surrounding ecosystem? And I think if you put that in perspective, maybe it's like 50% of the value ended up getting leaked. And I think on your own chain, like, that instantly becomes yours. And so the financial decision around where do I build, I think it might be pragmatic to start on a shared layer like Solana or even Ethereum. But as soon as you get to a certain size, it's almost inevitable that you end up kind of launching your own chain. And I think that's what we're seeing here with kind of Converge Network and even Robinhood, right? With kind of all the distribution that they have. And so, to Matt's point, I think the customizability and just owning the value chain is incredibly important. I think to answer the question around like Ethereum and like L2s, I think in some ways, because Solana is maxing out on revenue, it's losing them these opportunities, and maybe they'll kind of change strategy. I think there is a question of how does ETH accrue value. Fortunately, that's not my kind of mission. But I do see Ethereum as kind of, and one, I see the EVM flourishing as not Ethereum, but two, I think Ethereum will remain as like a hub for many of these kind of L2s. And maybe that's, a successful story there, right? As a public good.
Andrew, I think that's kind of the issue, is that no one's thinking about value accrual back to ETH. It's no one's mission at this point.
Vitalik is.
I hope so, for the sake of our back. Cool. Well, August, you mentioned you guys are focused on extending Ethereum. Curious how you guys think about value accrual as well. Another kind of question that actually have a quick side note. Is the gas token on Robinhood's chain going to be ETH?
TBD.
TBD. Okay. Kind of plays into the value accrual conversation here. As you guys think about value accrual, especially as we extend and proliferate this technology outwards, what is the best way to optimize these flows so that we don't ostracize users, but we're able to have a collaborative environment?
So basically, the extension means here that you need to provide the more space for ownership to applications. So they are getting beyond just as smart contracts. and their front end. So they want to own more more space, starting with the transaction ordering, then the processing, like all this stuff. So basically, the extension means that they should have like the same experience as developing the smart contracts, the launching chains or like app chains, like rollups, whatever. It shouldn't be a problem for that. So they should launch it as easy as possible within a single click, have everything that they can tweak, everything, like every single place where they can put some custom code, like for value accrual, whatever. And that's the key. So basically, we should have really good user experience, like developer experience, let's say, and the same tooling, same everything as the smart contract developer.
Yeah, maybe quickly just add on value accrual. So even though Ethereum is not like making like tons of money out of his layer twos, still like companies like Robinhood choose to make a layer two, right? Like Base operates as a layer two, like it still gets the mind share, right? And everyone is following it and like is using EVM. And I think it's still that they're keeping the dominant position in this space, just maybe like not so directly. So I don't think it's necessarily bad in the longer term strategy. I guess like there will be some solutions to actually solve this.
And another question on that is, in Robinhood's presentation, they talked about why the Robinhood chain will be the home for RWAs, not just financial transactions. They mentioned real estate, art, stocks, of course, as a financial part of it. But I'm curious, from the infrastructure point of view, is when you're thinking about building this out and the support for all of these verticals, are you building technology and infrastructure specific for each of these segments? Or when it comes to your infrastructure, is it pretty much a one size fits all? The same smart contract infrastructure works for art, for real estate, or do you have to segment these out? How do you think about it?
No, yeah, so you definitely have to segment a bit because like pricing art is completely different than pricing real estate, right? And how you price these things, it's even like hard to determine in the real world how you do that, and so it's even harder to do it on chain and like make it tradable 24/7, I guess. So like really curious to see how we are like how we will try to bring this on chain. But like as an infra provider, you always try to build like probably as most adaptable infrastructure as possible, like that it would cover all these use cases. But of course, like for each specific, like for RWAs, for art, for like crypto prices, you need some special tweaks that would actually allow you to be flexible enough to integrate new cases.
And I agree, but I think in terms of underlying stack, so like Arbitrum for Robinhood, it's something that they own and something that is common for any kind of smart contracts. So they can allow like some custom like precompiles, whatever, plus like the massive amount of work that was done before, and like DeFi space and etc. And plus like in stylus, they also can have like classic C++ applications probably.
Awesome. And generally, the infrastructure has really grown to an extent where it almost feels like now it works. We're ready to move into this consumer direction. Robinhood has validated that thesis. Now, what we do have is a lot of similar structures. Maybe on the L2 side, we see this in data availability a lot. And so I'm curious, when it comes to projects winning these deals, sometimes, it almost seems like it's the biggest grant that wins the deal. Is that kind of the case that you guys find when it comes to this? For instance, like, did you have to give Robinhood a grant to win that deal? Or is there maybe some other ways to think about winning some of these integrations?
I love these questions. I can't speak to that. I'm actually, not the BD guy. But also I think that, historically the Arbitrum team is always, in particular at Onchain Labs, like we're trying to build a product that people want to use because it delivers value. I think generally the meta in crypto, as everyone's aware, for many people has been super sick because you're like, I'm going to go farm a grant. And I'm not saying that these larger teams are doing that, but we know many projects that can sign up and get paid to build literally nothing. What? This is value leakage. There are people who can't eat and people are getting paid to say that they're going to build something. This doesn't make sense. So it has to stop. On the other side, once you open this, like, Pandora's box and it becomes the meta, And people are going to exploit that. And it is very hard as a, somewhat sophisticated project team who's actually focused on providing value to their users to reason about all the details between all these different very complicated infrastructure projects. So then, yeah, money does speak. And I think that's why we've seen it continue to play out. But in terms of the details of the deal, like, good luck.
Yeah, it really feels like the meta now is show me the money. Words can only take it so far. Andrew, I'm curious with your perspective on this as well. Roll up as a service, the RAS space has seen a similar dynamic. And so when it comes to winning some of these deals, these integrations that go and they launch their own roll up, have you had an experience with kind of these bidding wars or these grants that kind of get mixed into some of these integrations? Generally, how do you think about whether or not this is net positive for the space?
Yeah, I think it's an interesting question. I think there's one way to frame grants where it's just like chasing money. I think another way to look at it is it's aligning interests. And certainly I don't know any details around Robinhood, but you can imagine that by giving them some ARB, like it closely aligns their interests, and that might be, net positive for Arbitrum. I think when it comes to like size of these grants, I think, Matt's point earlier around like building a product people want to use. I think sometimes you have to pay people to use products that you don't want to use. And when you do want to use it, it's a lot easier to get the deal done.
Just to follow up on that, another meta here that I've heard quite a bit about from guests on the roll up is this revenue meta. It's the idea that, look, we have some projects that have found some product market fit. They're generating revenue here and now in the present. And then we have projects that are maybe a little bit more long-term focused, right? So they don't generate revenue now. In fact, they're paying users to subsidize the product and try to generate some network effects down the line. Where's the line? Like, where do we draw the line here? How much subsidy is too much? And generally, how quickly do you think these teams need to start generating revenue?
I think this is a general question on like, how do you build a business? I think even in Web 2, for example, like Uber for the longest time, right, was losing money. But the thesis was that at some point you build a critical mass of supply and the unit economics start to kick in. It's a little bit unclear how those dynamics play out in crypto. The winner does seem to change every cycle, but what I can say is the talent is getting smarter and smarter and the products are getting better. And so, maybe we'll hit a point where we start to see those economics kick in. Certainly products like Hyperliquid and Arbitrum 1 are examples of revenue generating products. And I think the space could use more of those.
I'm glad you brought up Arbitrum 1 because I did want to kind of ask, with this newest integration and the successful growth of Arbitrum Orbit, what's next for Arbitrum 1?
I think a lot. I mean, there are new projects deploying every day on the chain. And listen, I think from an infrastructure developer perspective, the goal is to build an enabling technology, right? We want to allow folks to build things that you could not build before. And I think we've seen that in DeFi, right? And we're not trying to take credit. I'm personally not trying to take credit for any of this. Well, I think it's really hard to answer. I think AJ earlier was talking about more creative structured products that allow users to get more yield from traditional RWAs that primarily just couldn't be traded globally. And so there was just less capital available to, provide value into the product that they're building, but also that aren't able to trade as frequently. That was one of the major benefits that I think Robinhood announced in their announcement, which is that it's going to be 24/5 to start 24/7. And this is not just to them. This is on all projects. Personally, 24/7 trading is a crazy concept, but we've obviously seen the success of blockchains generally, primarily because of that. And so I think we're going to see a lot of innovation. I think one of the, personally, if I had to make a prediction, this is probably obvious at this point, but stablecoin issuance is going to dramatically accelerate. I think Circle's success in the public markets has kind of demonstrated a global liquidity interest in this kinds of equity. And so businesses are going to be built around this. We'll see how long it takes for consolidation to occur around stablecoins. But I think we're going to see a lot of deployment there, particularly from institutions and governments.
And you mentioned structured products as well. And I think the breadth of assets that will become available since they're focusing on RWAs, generally real estate, all of this plays into it, gives a lot of opportunity for very creative structured products. So kind of as we wrap up here, I'm curious, maybe we could kind of take a brainstorm session, because another thing that Robinhood mentioned in that presentation was that they're going to build an entire ecosystem. Vlad was talking about developers coming in, building on top of Robinhood's chain, and this does create a very vibrant ecosystem around the core Robinhood products. So I'm curious from everyone's perspective, what are some of the things now with that user base, with that liquidity now coming on chain? What do you think are some things that weren't possible before, but now are possible to build on top of all of these new assets and liquidity and users?
I think there's some pretty, Coinbase and Base are maybe a good parallel where Coinbase has their smart wallet and kind of give access to DeFi apps on top of Base. I think there's a very obvious parallel here with Robinhood where you have retail, but they've maybe never had a chance to go on chain. And are there interesting products that Robinhood themselves can offer that, DeFi can, and maybe even things like Athena, right, make their way to Robinhood chain in a way that these users can easily kind of access. And I think we're only just getting started with the types of structured products and composability loops that are going to enable unique experiences there.
Are you suggesting a Robinhood stablecoin?
I think they have a stablecoin, no? The USDG stablecoin
has a stablecoin?
I think they're doing a consortium one with Paxos, right?
Okay, we're going to have to fact check that, but very cool if they do. I totally, agree that Robinhood and all of these stablecoin providers will increase issuance. And I think the U.S. government is looking for that to find some net new buyers of treasuries. And Algis, Zigis has.
Yeah. I think overall bringing more of these assets on chain will allow just much better product. Like you can build like lending protocols where you accept like stocks, you accept art, like you can evaluate potentially on-chain salary that you're receiving, and basically based on that you can give uncollateralized loans. So basically like these chains can become like the new banks, right? Like where each chain acts as a single bank, but just where everyone can clearly see how we operate and basically avoid situations with like uncollateralized assets or something like that. So I think the possibilities here are endless. Like really excited to see like how this will be built up. We see a lot of traction in RWA space overall, right? And the infrastructure that we currently have, I think like you can build so many exciting products that everyday users can use, the retail, the institutions, and everyone.
Yeah, just a little bit to add. I think nothing's changed in terms of the ideas that might be implemented in the blockchain stack, using the blockchain stack or whatever. The only thing is changed is like the time and the maturity of the software that was developed. It's time proven already, and first users, like big users, start using it. Like coming maybe year or 5 years, we'll see if like the adoption of it, how it works, like first benchmarks, tests, results, etc. And then we'll see a lot of like integration, like embedded DeFi products, embedded like RWA stablecoins, all the stuff like within like classic applications.
Awesome. Last one here. It's a two-parter. We're going to start with Andrew and come down the line. Very simple. What are you bullish on? What are you bearish on going forward?
Bullish on generating revenue. Bearish on grants and spending too much money.
Bullish on decentralized tech and like building decentralized sequencers, distributed networks, and maybe bearish a bit on the more centralized stuff that's being built with some chains we see in the market who still struggle to actually find the path to decentralization.
Bullish in UX. I mean, fast finality, all these products that should help people to have the best experience in interacting with any stack, any blockchain, any application. And bearish in grants.
Kind of inverse to Andrew, but the same point. I'm bearish on, launching a token as a kind of core business concept to projects in the space. I think easy to capture asymmetric upside when you have a lot of uninformed kind of retail investors that are able to ape in. I mean, there's a reason why regulation exists in traditional financial markets. It's to protect the user. I'm bullish on Arbitrum and the community and the technology, but particularly on like societal awareness of the importance of this tech. Like we're starting to see it. it's not just in the industry we operate in, but it's in the general media. People are becoming aware that the structure we've been operating in has not been sustainable, it has not been fair. And now that the tech can support you actually holding your money and conducting trade on something that you can partially own, it's almost GG.
Best tech wins. Guys, give it up for our great panelists. Thank you.
Thank you.
Thanks.